In the space of 10 years, Africa-China bilateral trade has risen from $10.8 billion in 2000 to $165 billion in 2010. Now, in 2011, Africa saw $152 billion in investment inflows into the continent, with over half of this taking the form of foreign direct investment. Now, Standard Bank, as one of the largest facilitators of these flows, is in prime position to see when large investors are investing on the continent and what African investors are doing with their money. That being said, we've got Mark Kalil, Head of Institutional Sales for Africa at Standard Bank, joining me now. Thank you so much for joining us today. So, last time we spoke, we said the interesting trend in 2011 was that foreign direct investment has overtaken donor flows, and we're continuing to see donor flows being pulled back as a result of what's taking place globally. Is that the trend into 2012?
Thanks, Sam. Yeah, it's so crucial to look at foreign direct investment. By definition, it's 10% stake in a company with voting rights. And if you look at that along with portfolio investment flows, that's what's going to drive Africa more than just donor flows, which is as important. But when you look at real money accounts, that's your asset managers who are managing third-party money, pension fund money, your and my money. Africa is starting to come into play in these portfolio investment flows, and then access to the corporates via venture capital, private equity, etc., via foreign direct investment, all comes into play. Africa is exciting.
Mark, just in terms of these flows, obviously there's a dramatic increase in the amount of money coming into the continent. Briefly, if you jump across the continent, which equity markets and bond fixed income markets is the money going to at this point? The
more mature, more developed markets. We like to look at Africa from regional hubs. So we always talk West Africa, East Africa, Southern and Central Africa. We've got representation in all those regions. Essentially, West Africa is commanding the bulk of the flow. I'd say at least 30 to 40%. And since the advent of pension fund reforms, which I'm sure we'll chat about, but it's been very positive market developments, and you've seen a lot of foreign and local investment flow into West Africa particularly.
And obviously the big market there is Nigeria, so I take it that the bulk of that money is going to the Nigerian market. What about just in terms of the number of investments that the money is going towards? Have you seen a lot of IPOs on the continent in the last decade?
In 2011, the only IPOs on sub-Saharan Africa, that's excluding South Africa and North Africa, were in Rwanda, which was only about $50 to $80 million. 2012, there has been a pickup, and I think that's just a function of the market, the crisis, the lack of confidence, like we've seen yields hitting 20% in West Africa, and last year they were hitting East Africa. But as we see the capital markets develop, and Standard Bank is investment banking is talking to corporates by new issuance of equity and debt, you would expect a lot more IPOs. We also have to look at the private equity route. A lot of demand for unlisted private equity. And Sam, we mentioned last time that the exit strategy for private equity invariably could be IPOs.
Yeah, we talked about that. When it comes to equities versus bonds, the issue in Africa, as it has been for some time now, is always liquidity on the equity front. Is it as bad in the bond market, or a lot easier to trade bonds?
It's a lot easier to trade bonds. Again, in sub-Saharan Africa, if you look at the definition sovereign debt, and we just talk about government bonds, government T-bills and corporate debt, that commands about 90% of your liquidity, where equities, unfortunately, at this stage are probably only commanding 5%. When you look on a value of the assets, sovereign debt versus equity, so you're looking at outstanding bond issuances versus market cap on equities like we used to, it's 50-50. It's about $100 billion on each. So it's amazing that the liquidity is so scant on equities. You would expect this to pick up as the markets mature, new pension fund reforms, and foreigners start coming more into play.
Let's talk about that pension fund reform for a little while, because one of the notes, it says here that the Nigerian pension fund assets are in excess of $15 billion and growing at around 30% per annum. African economies are growing, consumers are becoming more prosperous. Is there a lot of saving taking place? And what are the big African institutional investors doing with the money that they've got?
Yeah,
are they keeping them on the continent or taking it offshore?
That's actually my mandate. My mandate for Standard Bank is to cover the top investment funds within Africa. To date, a lot of the investments for people's pension fund money is locally. They are wary to invest outside, internationally or cross-border, and yet there have been dramatic change in reforms, and they are getting very aware of the opportunity out there. So if you look in Nigeria, there was a market development now where they could invest their allocation to equities from 25% up to 50%. That's a vote of confidence. Because of that $15 billion, now it's going to filter into the local equity market. If you look in southern, just to run to it, Southern Africa, Botswana, the BPOPF, that's your government pension fund, managing $5 billion. They've already said publicly they'll invest 14% of that into the rest of Africa. So it's real estate, hedge funds, or alternative investments and private equity. So there's a lot happening, but I do think that a lot of the opportunities are still very local, and they're trying to mature the markets locally.
Sorry, to ask a question first, because I'm going to ask another question off the topic. So anything to do with, pension funds? Okay,
just on the pension fund route, you've obviously indicated some large public government pension funds. What's happening in the private sector? Has there been an explosion of private sector asset managers that are also trying to cater to manage these funds?
Again, if we look at Ghana, where there was also pension fund reforms, there used to be 18% of somebody's pension used to go to the National Social Security Scheme, the NSSF. They've now put that into a 3-tiered pension fund process. So 13.5% goes to the same scheme. 5% will now go to 5 asset managers that have tendered for that fund management business. So that answers the question. And then there's a third scheme where it's discretionary. If you've got additional money, that'll be managed in terms of your pension fund. So these are positive, international best practice, strong corporate governance, and they're trying to align with more formalized structures.
When it comes to growing trade on the continent and growing, attention, is it going to be local assets and local asset managers, whether it be pension funds or just general private players, or is it going to be the international community that really takes Africa to the next level when it comes to the markets here?
Thank you. I'd have to say that it's a mix of both. But on the bank side, and if you look at the brokers and investment houses who are trying to access Africa, they have to partner with the local brokers and broker dealers. So from the financial market side, brokers and all that, there's going to be a lot of commission and trading access. If you look at pure fund investment from the likes of real money accounts, it's amazing. The global institutional assets under management, it's $22 trillion on fixed income globally, 8 trillion in equities. Most of that obviously is in America and the developed markets. That's 80%. But when you look at emerging markets, it's probably 5% of that. You've got like $1 trillion. And when you look at Africa in particular, it's about $100 billion of fixed income into Africa.
Of the $22 trillion pie.
Yeah. South Africa's the bulk of that. So we tend to look at it as dedicated Africa fixed income. Sub-Saharan Africa, it's about $25 billion. Equities is about $20 billion, and private equity about $12 billion. So it's very focused. Emerging market players are looking at it, but obviously this is what's going to drive the continent.
I mean, what's holding investment back right now, apart from the factor of liquidity and investing in the unknown? What would you say are the major challenges right now that Africa needs to sort out before it gets more money flowing in?
10 years ago, there was I think, African Banker article that said the lost continent, and 10 years later it says the continent of hope. So it is one of the aspirations is investor confidence, obviously. I would say the major constraint is still liquidity and access to the continent. I would say product provider, Standard Bank, keep looking for new products where we can engineer access into the market. And whether it's baskets, where we're making markets and making it more liquid, and customized solutions for investors. So I'd basically say liquidity, product, and then obviously on the investment banking side, when we're talking to corporates, you need assets. There's a lack of investable assets. So we're engaging all the corporates, giving them confidence, come to market, issue equity, issue debt, and then that'll be snapped up by the market.
Mark, just in terms of, you find areas of attraction within the continent at this point, and you've identified Nigeria and Ghana as two areas where investors should look to invest. Tell us a little bit about Ghana and whether that opportunity is in the fixed income side or in the equity side, and what you're seeing for the fundamental development of that economy there.
Thank you. Ghana have got elections, parliamentary and presidential, at the end of the year. We're actually looking for a post-election rebound. The currency, we actually like the equities, we like the bond market, and we like the foreign exchange. The currency's gone from around 1.5, 150 to the US dollar to 190. So there has been massive sell-off, and yet we're looking for a post-election rebound. Interest rates currently, your 5-year placed at 23%, your 3-year bond was at 21%. So you're getting this high yield currency. They have found oil. They're exporting 70,000 barrels a day. Nigeria's 2 million barrels a day. So we're calling it a hydrocarbon country. In terms of exports, it's strong. Balance of payments, trade surpluses, it's strong. It's a high-yielding currency. Inflation's come down.
Sorry, what about the infrastructure to support the oil sector? Because that, of course, is still a big issue in Ghana.
It is, but again, as the productivity and production lines come more on stream, that you'd expect it to export a bit more. So the fundamentals are in place. The markets are there. They're not as liquid, obviously, as Nigeria, but on the equity side as well, they're not as liquid, but that's one of our top trades. So
you're getting 21% by putting your money in the bank account there, and you're expecting quite a big currency appreciation versus the dollar. So yeah. Is it wise enough for retail investors to start thinking about Africa yet? I mean, with all the nuances and the very fragmented nature of Africa, moving currencies, is it an easy thing to do for a retail client at this point?
Standard Bank tried to introduce which we did successfully, the Standard Bank Africa Equity Index. It was an IPO on the JSE, so that the retail investor could get access to 31 countries, listed equities in Africa, 183 stocks. It's not that easy for retail to get into Africa yet, and yet we're working on products. For the institutional investor, it's amazing that some of our orders in the last couple of months have been equity investors using their cash allowance on the equity fund to invest in Nigeria and Ghana T-bills, because they're saying they can get 20% on 1-year T-bill. We expect an appreciation in the currency instead of cash, and they've actually expanded their mandates to include that in the equity funds. So it's so important to start to look at these on a cross-asset allocation basis. Mm-hmm. But we do keep looking at the retail investor. That always important.
Is it going to be the internet that really spurs this, being able to access these markets, or what is it going to be?
Yeah, TPS, through transactional product and services. Standard Bank, we're rolling out infrastructure through the continent. We got a successful online share trading platform in South Africa, and we're trying to launch that into Kenya and Nigeria to cover East and West Africa.
I'm sure that will be very exciting.